All right. So this is the economic calendar and trading view. Again, I just like to take a look at it before the week start to see if there's any. Again, the main thing I'm looking at is Jerome Powell. Is Jerome Powell speaking? That's the first thing I'm looking at because uh, anytime he speaks, there's going to be a lot of volatility. Going into those days, and it could be some afterwards, depending on what he says. So, um, let me see here. We can change this to what this week. Jessica.
What? How do I watch Jerome Pyles speak? Can I just watch it on YouTube or something?
Yeah. Yep.
Okay.
You can just go to YouTube and type in Jerome
Um,
Powell speech today or Jerome Powell speech.
okay.
Yeah.
Uh, thanks.
Sorry. Yep. No, there's no secret backdoor link that you have to go to the Fed site or yeah, actually I don't even think you can watch it from the Fed site. Um, Yvonne?
But Darius, can you watch it from TradingView?
Not that I've seen. No.
Okay.
Normally I watch it through YouTube, and YouTube will actually like if it's already on the calendar that he's going to speak, like it's not an impromptu speech, they'll let you actually save it, and then they can notify you when the speech, when he's actually going to start speaking. So, for instance, if you look at it, if you know he's speaking at 2 p.m. Eastern Standard, and is I don't know 9 a.m., they already have the link set up. You can hit the link, and then it'll notify you once he starts his conference. That's normally how I do it. Could be a better way, but I haven't found a better way. I think YouTube is
Okay,
the
cool.
easiest. No problem. All right. So I have my high importance button turned on, so it took out a lot of the clutter that we saw. We'll change it in a second, but I just wanted to focus on the main thing. So Monday we do have a manufacturing PMI coming out, which we can see that the forecast. Let me see if they're going to give us a chart. Yeah, we can see the forecast is 49.8. The prior is 49.2. I don't think that this is going to have any major impact on the market as far as which direction it's going to go in. I still think the market is going to be trend based, meaning once we look at the chart, we can see is it in a buy or sell trend for the major indexes. So PMI sometimes can shift the market, but again, we have a few other things happening. Well, this is the manufacturing PMI. You can see we also have the services PMI, which again, these are the forecasts and the prior are pretty close. So again, I don't think there's going to be any major shifts surrounding those. But we do have the job openings, the JOLTS job openings. This is going to be in focus for Tuesday, and I think that this could have a large impact on the market because the last time that Jerome Powell spoke, he said two things. One, he said that of course we're still watching inflation to try to get it down to that 2% goal. And if inflation starts to cool, then we can go ahead and start doing some rate cuts, which we haven't. Inflation hasn't cooled enough yet to do any rate cuts. But the second thing he said is that we're also watching the job market. So this report could be a substitute for inflation cooling, and could be another reason that we could see a rate cut, even though inflation is not uh, trending down towards that 2% target as quickly as the Feds want. So Tuesday, I'm watching for this data drop. It comes out at 10. What is that? 10. Yeah, 10 Eastern Standard. Um, so this is probably one of the biggest things happening this week. This job openings. Also on Friday, you have the non-farm payrolls and you have the unemployment rate. Again, things that are related to jobs. Um, Jerome Powell is the one that put everything into focus when it comes to jobs because for a while, this job data, it really didn't do anything for the market. Everyone paid attention to inflation data. But now that Jerome Powell said, hey, if the job data is right, then we can do rate cuts based on that. Now, I think that's going to be key drivers for the market, regardless if it goes up or down. So let's turn this off. See, is there anything else that we're missing here? Nope. Uh, nope, nothing major. I'm looking for any Fed speeches. No random Jerome Powell's in here. Thursday, we do have the initial jobless claims, but we have that every Thursday. Um, but again, I think that anything related to jobs, is going to be important. So Thursday, the initial jobless claims come out at 8:30. You can see it's right here. That could also shift the market. So for my people that like to day trade, um, I would be on the lookout for that drop at about 8:30. Again, the market opens at 9:30, so this comes out first. If you're already in a trade on Wednesday, you may want to be careful because well, especially if you're trading options, because on Thursday this could change the direction of the market and turn a win into a loss. So let's keep going. Friday, what are we looking at? Nope, no Fed up. Found one. Fed Cook. I don't think there's going to be anything major. So all right, no Jerome Powell. Perfect. All right. So those are the key drivers for the market this week when it comes to major reports. We could have some other things that, geopolitical news. Again, we're in the midst of, we're on, I don't want to say the brink of World War III, but it's a lot going on in the geopolitical landscape when it comes to Israel and Ukraine and Russia and the Palestinians. It's just so much going on that we have our hand in the U.S. that could also just randomly push the market one way or another. So I'm keeping my eye on that as well. All right. Let's do an indicator breakdown and talk a little bit about what to do when the market is choppy, or how to decide if you're just going to chill for the day. Let me clean some of these lines up. All of these lines mean that probably been trading the SPY a little too much. It's okay. We can start fresh today. For the sake of the breakdown, give me 2 seconds here. Get this out the way. All right, we're on a naked chart now. Perfect. All right, so set this. Cool. All right, so let's just quickly go through the indicators, how they work, and how I like to use them. Starting from the top, we do have the RSI. The RSI is the relative strength index. This is going to tell you if a stock is hot or cold. And what I mean by hot or cold is if the stock is overbought or underbought. So if the stock has an RSI that's close to this top line, which is 70, then the stock is going to be hot or it's going to be overbought. So if a stock is overbought, when it comes to the probability of profit, I'm not going to say it's impossible to make money at a 70 RSI if you wanted the stock to go up, because we clearly have some situations here to where it went to what, 74. This is what, almost 80, but it is very rare. So when you're looking at the RSI, you want the RSI to be favorable. Normally, I like a 45 to 55 pointing up. Sometimes, for instance, this is at 57. Sometimes I will trade a high RSI depending on the other indicators. So, for the members that are in the Discord, you'll see me look at a 62 RSI and say, hey, I'll take it, depending on what else the chart is giving me. But normally, if you want the easiest and smoothest trade, especially if you're swing trading, you're buying low, selling high, you want 45 to 55 pointing up. It's just easier that way, because if it turns down on you, it's not going to happen too fast, and then you can go ahead and get out the way and let the stock do what it's going to do. But yeah, so the top side is 70. Again, I like 45 to 55. So this dotted line through the middle of the RSI indicator, this is the 50 line. So if 70 is hot, 50 is warm, 30 is going to be cold, right? And a 30 RSI means that the stock is oversold. So that means that people are selling it a little too much, and it could be in a downtrend. You can see that we just came from almost touching a 30 RSI. I think that is a what is that, 31? Close enough. A 31 RSI. Now, a lot of people ask me the question when it comes to an RSI is why trade a 45 to 55 when I can see more profits if I'm trading a 30 RSI. Well, if you're trading a 30 RSI, you don't know how long it's going to sit down, because again, it's in a sell. Like, people are selling it. It's selling off for a reason, and you don't know when the investors or traders will change their mind about the stock and when it needs to go up. In this case, buying a 30 RSI would have worked. You would have just had to hang on for a minute, because it went from 31 up to 45 and came down. So it's all about the comfortability of thought. This right here, when it went up to 45 and then it came down to 43, could have scared a lot of traders. They could have exited here, especially if they would have got in at 30. And then it went all the way up to 51 and came back even lower to 41, right? So this would have been a roller coaster ride if you would have got in at 30. But if you were thinking with a longer time horizon, like again, going long on the SPY, this would have been a nice trade to hold from 30 to 70. But it takes a lot. Again, there's a lot of shaking out that the that the market was doing. Also, last week the SPY was frozen for a second. There was a glitch. I want to say it was a data glitch or something that was happening to where the SPY literally stayed in the same spot for I think like 2 hours, 3 hours. One of those days. I got to go and look back in the Discord. But again, for those reasons, you want to trade something that has the momentum to the upside. And the RSI is one of the indicators that you can look at and say, hey, we have upwards momentum. Let me go ahead and just ride the wave to the upside and exit before it decides to turn around. Do I have any questions about the RSI? Cool. Let's keep it moving. All right, main chart. Let me hide a few things because we're going to focus on look at the candles first. All right. I haven't said this in a while, but remember when you're looking at these candles again, I don't like to go too deep into candles, but just remember the colors and where they exit. I'm sorry, where they open and close at. Again, if you're looking at a green candle like this is saying that since it's green, of course, this is a day that the stock increased and stock price. The stock price. I said that backwards. The stock increased in price, and we can tell based on the color of the candle, but also the bottom of the body of the candle is where the stock started for the day, and where it ended for the day is going to be the top side of that candle. So it started here at 523 and it closed at 527. Now, we do have this tail, or some people like to call it a shadow or call it a wick since we're talking about candles, that pulled all the way down to 518. So what that means is that the market opened here, or the stock opened here at 523, pulled all the way down at some point to 518, came all the way back up and closed at 527. So roller coaster of a ride for a day. But when you're looking at the candles, you start to understand what's what, especially when you take into account the wicks. So again, if it's green, it opens at the bottom, closes at the top, simple enough. And if it's red, it's going to start its day at the top and end its day at the bottom of the body. Now, again, the wick is just showing the path traveled throughout the day, but it didn't close there. It dropped all the way down to, what is that, 524, and then it came right back up to about 525 and closed. I always just like to mention that because when I first started trading, I kind of ignored candles and wicks, but now I kind of add them into how I like to think about trades. All right. Next thing, let's talk about support and resistance. We haven't talked about that in a while. Oh, Yvonne, you have a question?
Yeah. Is that a cup and handle? Is that the pattern that we're seeing right there?
This dip here,
Yeah.
pull up, and then
No.
let me see. It could be. This is a nope. I wouldn't call it a cup and handle. It definitely looks like a cup and handle.
A cup and handle only for like single stocks, not for like something like this that would be like a large 500, like the SPY. Because I wouldn't a cup and handle not apply to the SPY necessarily. You know what I'm saying?
Yeah, I get what you're saying. Nope, it can apply to the SPY. Let me show you something really quick. Maybe I can spot it on the day. Where are we? Yep, this is a cup and handle right here. So it started, let me put a line here. It started here. The beginning of this cup started around 477. It went all the way down to this baseline here. Or actually, we can put it here just to make it cleaner. Get rid of this one. So, yep, it started, the top of the cup is here. It went down, found some consolidation at the bottom. You can see it hit that line a few times. It came back up. It didn't really The handle part didn't come back up. Sometimes the handle, you will see it get back up to this line, but we can see this handle right here started there, came back up here, it pulled down, and then it bounced out. Again, a cup and handle is just a large parabola, handle, bounce out to the right side. So yep, it still can happen. It's just on the SPY, it may take longer. Like on smaller stocks, it could be, it could happen in 5 days. It can happen in a few weeks. On the SPY, this is happening. This is like a year and a half, I want to say, or maybe more, maybe 2 years that has been forming this cup and handle. But yeah, patterns can happen for any stock on any time frame. But if you're looking at the major indexes, it may take a little bit longer since they're slow moving giants. Does that answer the questions?
Yeah, I guess I was focusing on the smaller time frame because I was like, or maybe not the smaller time frame, but looking at like the last pattern, trying to figure out patterns. That's all I was trying to do.
Yeah, this is actually a double bottom.
Okay.
Yeah, we can see it came down, and a double bottom again is just that W shape. We can see it came down here. Let me place my line here. Yep, put it there. You can see it came down here. It tested this line. Let me zoom in some. Came down, broke that line. We got some green candles that filled us up in the middle. We came down again on red, tested that line on this green candle, and then bounced back up to the upside. So that's a double bottom. Down, up, down, back out to the upside to make that W shape.
So would you suspect for the candles then to continue to go up then from that shape?
Well, the pattern for the double bottom is already completed. So the double bottom, the way that it works is that your price target is basically where it starts at. So if it started pretty much at, what is that, 523, 524, came down, went up in the middle, came down. This is where you would probably start your entry in between this support level and this level here at about 510. So between 500 to 510 is where you'll find your entry. And then you just want to play it back up to this level around 523, 524. So for like a $14, $15 gain to the upside would have been the safest way. But you could also held from the time it went down to 500, went back up, came down. But yeah, that's just a lot. But yeah, the double bottom, you just want to play it back up to the level that it started at. That's the easiest way to play it.
Got it.
Does that answer your question? Cool. All right. Already started to muddy up my chart, but all right. Let's talk about support and resistance. So when you're looking at support and resistance, again, you want to find a point or points on a stock to where it touched 3 or more times and rejected. And that's going to be the criteria for the support and resistance. The only difference between the two lines is that support is going to be below. Just think about the table supporting your monitor or your computer. And then the resistance is going to be above, right? So resistance is going to be the ceiling. Support is going to be the floor. Once you have your floor and your ceiling in place, now you have a trading range to where you can decide on if it's worth taking that risk. So for instance, if we were, let me put a waypoint. If we wanted to put a line here, again, the criteria is 3 or more touches and a rejection. So obviously we had way more than 3 touches here. The stock was on a crazy run out of that double bottom that we just talked about. It got up to this price point and started to just, that's a crazy chop that happened. We even got a blood red candle that went all the way up to 533 and just crashed down to about what, 525, 524. And then that signaled the downtrend with a major rejection. So in this area, we can safely put a resistance again because it's above the stock price. The stock, you can see it here. You can see it here. The stock is currently at 527.37, and this line here is at about 530 even. So 530 would be our local resistance. Now, can you have more than one support and resistance? Sure. You don't just have to have one. You can have multiple price targets. But for what we're looking at now, this waypoint that we set was at 530. Again, because of that same criteria, we had 3 or more rejections to where we had a green candle, red candle, that's one rejection, and then we had a lot of choppiness happening there. So we placed that there, and then if we're looking down here at support, we put support down here at 500 because we had the same type of issue happening even in this area. So we could ignore this and just pay attention to this and see that that could have been a support area. So we see that the stock was running. Let me pull this over some. We see that the stock has been on a run coming from what is that, November? It was running, running, running. Once it hit the 500, we started to get some choppiness and some testing at that 500 before we eventually broke through. The stock continued on its run up to about 523, and then it lost some momentum. But when it was coming down after it lost that momentum, the waypoint was back at 500 because again, that was the choke point on the climb up. So on the way down, we still had to check in at that 500, and when we checked in at 500, that's when we got some really nice bounces. We got some decent sized green candles off of support, and then we completed the formation for like 75% of that double bottom before we would have played it on this right hand side back up to where it started this the drop here. So when you're placing support and resistance, the only difference is that resistance is above, support is below. And when you set it up, the way that you want to think about it is this. If I'm looking at trading the SPY, and again, you can have multiple support and resistance. I'm not going to say that this is the only one because there's definitely some support levels that I can make closer, but I just want to have this support here to help me with what I'm about to say as far as thinking about risk management. So if I'm looking at the SPY and I'm thinking, okay, I want to trade this up and I also want to make some money, and let's put options aside. I just want to trade shares. I want to make some money from this. How much money is it to be made versus how much money is there to be lost, right? If my resistance is at, again, just ignore the fact that we could put some safer support zones here. But right now we're looking at 530 versus 500, right? We're at 527. So you're looking at making $3 to the upside if it goes back up and tests 530 versus losing almost $30 if it drops back down to 500. So when you have something like this is where you get to decide, okay, do I want to take this trade? I'm risking making $3 to versus losing a potential of what, 27 or 26 if you want to add the 37 in there. But I can lose 26 to 27 bucks if I'm wrong, based on my support and resistance, versus I can make $3 to the upside. So this is a trade that I wouldn't take if I'm only going based on my support and resistance. Again, ignore the fact that we could situate it a little bit better, but this is how I think when I'm setting my support and my resistance. So if I'm looking at different time frames, if I'm looking at lower time frames, the 4 hour, the 1 hour, or even higher time frames, I'm looking at the 1 month, 3 month. Once I lock in my support and resistance lines, that gives me my trading range, and then I get to decide, okay, I can make $30 to the upside per share versus losing 70 to the downside. Is that a trade I want to take? And normally that's a trade I won't take. If I have more potential to make, if I have potential to make more to the upside, that's a trade that I would take versus losing more to the downside. So ideally to me, I would like the risk to be, I can make $27 to the upside versus only losing $3 to the downside. Is how you want to think about setting your support and resistance. Do I have any questions? Nope, no questions in the chat. Cool, cool, cool. All right.
Actually, sorry, should there not be another like support line at the top of that other peak to the left? Like, so maybe around the 524 range?
Right here?
Yeah, like around there.
Yep, that's exactly where there should be. That's why I said for right now, just ignore it for the sake of the argument. But yeah, it's definitely, matter of fact, we could put support there. We could put support here. We can also put it here and here. But now, now it looks totally different. But yeah, you can have multiple levels of support, and we can see that we got a major rejection on this green candle to where this green candle, let me zoom in here. This green candle, we had a wick that came all the way down to about 517, 518 range, and then it pulled back up. So it went from red to green. That could potentially take us back up for a test at that 525, 30. But yeah. Yep.
So then how do you know what the trading range really should be? You know, if
Um,
there's any different breaking levels in there.
Yeah, so it depends on the other indicators. Like you can't solely go off of support and resistance without checking the other indicators. The other indicators will paint a better picture than just trying to look at it like this. Like if we're looking at it like this, but we haven't checked the RSI, we don't have any moving averages, because you'll also notice what this moving average is in line with that support, which I'll talk about that in a second as well. But if you don't have your other indicators turned on, then this is just not enough information to go off of to make a trade. You still need to check MACD to see if you have a pending MACD crossover to the upside or downside, so on and so forth. Does that help, Lisa?
Yeah, that helps a lot. Thank you.
No problem.
Also, why is it just 3 touch points that you're looking at? Like why isn't it 5 or 6, or do you know what I mean? To see if it's like it's touching resistance or touching support.
Yeah, I go with 3 because 3 gives me because I like to think about it like this. If it can touch the same price point 3 times and it won't break through, there's a likely chance that we could get a rejection. The more that it tests that line, like you could say, okay, well, my criteria for setting support and resistance is going to be 5 touches, but your chart is going to look completely different than having 3 touches. So it just depends on the frequency of the touches that you need for how you want to enter and exit trades. I think that 3 is good. Some people would say 2. It's just, I guess it depends on the trader, but it's also the same rules for like confirmation, right? So, and what I mean by that is if it touches, let me zoom in here. If it touches support and it bounces on 1 candle, is that enough confirmation for you to enter the trade? For me, I like 2 candles of confirmation. Some investors and traders will tell you 1, some will tell you 3, so on and so forth. It just depends on risk tolerance at that point. But I think that 3 touches and a rejection for the years that I've been trading normally works for me. For instance, we got a pretty good line here because we got a rejection here, here, and here. Right now, if you were a person that said, "Hey, I need 5 touches and a rejection," you will completely miss this zone as a point for support. Right? You would ignore this because it's only 3. Or yeah, even if you counted this, this would be the 4th, and then you can count that one as the 5th if you wanted to read it that way. But I still think that 3 has been good and it has worked for us over the years, so I've just stuck with 3. But again, I think that one is just a matter of opinion. In my opinion.
And is it always 3 based on the daily chart?
No, it's 3. I use 3 regardless. I can be on a 30-second chart. I'm still looking at 3. I can be on the 6-month chart. I'm still looking at 3.
So then what do you make of like sort of the resistance at 530.29 when there's so many touches? Because you have 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. Is that like
Yeah,
when you
so
see that, are you like that's triple the confirmation?
exactly. Yep. I just need 3. Now, if it's more than 3, fine. But as long as it's 3 or more is what I should say. So if it's 3 or more, perfect. It qualifies. In my opinion.
So when you look at that chart, you know that 530 is really a resistance area for you because it's
Yep.
touched so many, and you can anticipate that being sort of a ceiling for a while.
Yep. Because we've tested it a lot. We've sat there for, this is what, almost 2 weeks that we've tried to break through this and we couldn't. And we had a major rejection here. This large candle was the precursor to this downtrend. Once you get a major rejection like this in one day, that says, oh, okay, people just gave up. The investors just gave up, and we could, even if it tests again like it did here, it came back up and tested one more time, it still wasn't enough, and we went on a downtrend back down to this 523, 24 range.
And if you're doing a swing trade or even a day trade, what's the time frame of your support? Do you know what I mean? Like, are you going back to say March for your support? Or you like what's the time frame that you would put the resistance and support?
When you say time frame, do you mean like how far back do I go to outline my support and resistance? Is that what you're saying?
Yeah. For a day trade or a swing trade.
Yeah, it depends on where the stock is at. So if it's at all-time highs, you can't go back anywhere, right? You can't, right now the SPY is at all-time highs or at a local all-time high at 527. So it hasn't sat around 527 long enough for us to go back to March. Like if we scrunch this chart up, let me reset it here. Yeah, if we scrunch the chart up, you can see that it's never been this high. So if we go back to March, it's nowhere near, it wouldn't be up here. So we couldn't go back. Now, when we were looking at this cup, when we were inside this cup bowl right here, it was easy to say, okay, these are the levels that we're going to hit, because you can look back at this wall and say, okay, well, let me show you here. You can say, well, we got stuck right here before in the past, back in November of 2021. So 2021 to the early 2022, we already plotted our support and resistance in this area and in this area. And so once we were climbing back out on this side, you can see after we came off of this support, we bounced, we went all the way up, and we still checked in at that same level. Still checked in, like even here where it started the downtrend, still checked in at the same level, even though this is what, a year later, still checked in here. We went on a downtrend, and when it came back up after going all the way back down to make this handle, the cup and handle, it came back up, and then it checked in again around the same price point. So in this situation, if you get a chart to where it's not at all-time highs, perfect, it works. But if you're trading a stock that it is at local all-time highs, like it's just floating around its all-time highs, you won't have any major reference points to go back and say, hey, it did this in the past. There's no history of the stock, ever being this high.
So how do you trade it when there isn't history of it being this high? Because the SPY is interesting because a lot of the major company, like it's kind of like how Bitcoin, their chart will mirror a lot of other coins, right? Like the SPY's chart will mirror a lot of other major companies' charts.
Right, yeah. So if it's doing what it's doing now, is at local all-time highs, what I do is just look at the psychological levels. And I think that's the safest way to go. And what I mean by psychological levels, I mean levels of 5, 10, 15, 20, so on and so forth. And you can see that if we were to go that route, and we plotted it at 530, right? You can see 530 was a psychological level that actually worked. 5, 10, 15, 20, 25, 30, it hit there. And then if we say, okay, cool, 530 was a psychological level and it's pulling back, what's the next psychological level? We can say 525. If we said 525, we do have support plotted here at about 523, 524. So we wouldn't be too far off if we went with the psychological levels. Like the psychological levels won't be spot on, but when you're at all-time highs, that's the best bet to go with. It's just like if Nvidia is at 950 and it's breaking up to 960, 965, the next psychological level is 1,000, right? Again,
yeah, like where the psychological level now is at 12, it's at 1200.
Right, exactly. Right.
That's
So when
it has to break 1200 to get to 1300, and the highest
exactly.
I think analyst rating on it is 1350. Yeah,
Yep.
But then after the stock split, who knows? This thing could go to 200. Like, do you know what I mean? The stock split is going to change a lot of things, I think, but you might have a different view.
Yeah, I think the stock split is going to be good for the stock long term, but if you're looking for an entry in Nvidia, if you're not already in, I think waiting until after the stock split will give another opportunity, because I think after the stock split, they won't have any more tricks left in their bag. And I also think that we'll start to see their profits and revenue start to normalize. Like right now, they're climbing, but I think that they're starting to peak as far as market impact and as far as revenue. I don't think that they can just, nothing goes up forever and nothing comes down for forever. So I think that there's going to be a point to where we start to see things normalize. And the reason why I'm saying that is because I was an avid studier of Tesla and Tesla's climb. And Tesla was the first, or not the first, but the most recent Nvidia. It was Tesla. And Tesla was doing the same thing. It was going up, 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 up. But then once the revenue and the earnings started to normalize, it started to slowly cool off and pull down. So, and that was after not rate cuts, but stock splits. That answer your question, Ty?
Yes. Do you think that after the stock split, there'll be a major pullback?
Yep.
So do you advise getting out of Nvidia before the stock split?
I would pay attention to again, this I would pay attention to the technicals, and then also I would check the SPY. Like, where's the SPY? Is the SPY in a position to keep moving higher? Because again, the SPY is going to just carry everything anyway for a second. So they may have a stock split, go up a little bit, and then cool off once earnings come out. So again, it depends if you're already in the stock. If you're already in it, I would pay attention to those psychological levels and start planning a exit strategy to figure out, okay, when am I going to get out to reset? And once this finally cools off, I can get back in for the next run up. But yeah, we'll take a look at NVIDIA's chart in a second, and then we can
Thank you.
continue with that. Yeah, no problem. Yvonne, you got a question?
Yeah, you already answered most of it because I was going to ask for options on NVIDIA. If I'm not in it now, would it be too late to go in this week before they split?
Oh, okay. Yeah, we can take a look at the chart, and we can see where, how it's positioned, because it's already been running. But I think, yeah, if we look at the indicators, it can give us an idea on where it could end up at. So yeah, cool. Let me check the chat, make sure we don't have any questions there. Nope, we're good to go. All right, let's keep it moving. All right, so moving average ribbon is the next indicator. This is one of my favorites. I won't say my favorite, one of my favorites, but it helps frame trades for me, because let me move this out the way, scratch this up a little bit. All right, so it helps me to see, it helps back my idea of support and resistance, because when you have these moving averages in a certain order, the stock will act differently around the 20-day moving average. So the way that I have my MA ribbon set up is I have a 20-day, 50-day, 100-day, and 200-day. If you get these in chronological order, from least to greatest, 20, 50, 100, 200, that 20 is going to act as a diagonal, or right now it's been acting as a diagonal support, and it can continue to do that. So you can see, if we just focus on this back side of the chart, that the stock was climbing at a slant, but it's also just bouncing off of the 20, right? And then you got the 20, 50, 100, 200 in chronological order, to where you really don't have to worry about the other moving averages, and you just can focus on the gold line. Does someone have a question? Oh, nope. I think someone just had their mic unmuted. All right. Yeah.
I actually do. Sorry,
Sure.
I was experimenting with TradingView and looking at the MA ribbons and stuff. And so when I got out of the daily time frame and got into like minutes and stuff, so I was looking at one stock that I think it was ARM, because it had IPO'd not too long ago. So I was looking at it, and there was no 200-day moving ribbon, and then I went to like smaller time frames, and all of a sudden there was. So it's not daily, right? Like, it's just 200 of whatever time increment you have specified.
Absolutely. Yep. That's
Okay.
right.
Okay. I just wanted that confirmation.
Yep. It's a 200 MA. Since we're on the day, I call it a 200-day moving average. If we're on the weekly, it's a 200-week moving average. If you're on the minute, it could be a 200-minute moving average. But once I go lower than the day, I'm not doing the math. I'm just calling it a 200 MA on whatever time frame. But yeah, that's right.
Okay. And it's just as effective on all the other time frames as well?
Yep.
Okay. Okay. Thank you.
Yep. So yeah.
Another question. In addition to look at NVIDIA's chart, can we also look at ARM's chart?
Yep. Let me put this in or someone write that in the chat, ARM and NVIDIA, so I won't go on a tangent and forget.
Okay. Thank you.
Ladarius, what's the difference between the 200, the MA ribbons or the exponential, when it's like the exponential 20-day or 30-day or whatever, 40-day?
Yeah, so you can use exponential moving averages. There's a lot of different moving averages that you can use. The only difference is that the calculation for how the line is formed is different. So if you're using the exponential moving average, it is front loaded, meaning the data closer to the right side of the chart is going to be more important than the history. If you're looking at the backside, the simple moving averages just work through and through. It's just extremely simple, straightforward. It's not front loaded, and for the time that I've been using it, it works the best for swing trades. Could you use the EMA for a swing trade? Sure. Not saying that you couldn't, but you just may have to think about it in a different way. Again, the only difference is the formula that forms these different lines. So you have a WMA, VWMA, and this is volume weighted moving average, weighted moving average. Again, it just depends on what you need, and then you can just add it onto the chart. Now, if you go into EMAs, you may use shorter time frames, right? You may use or not time frames. You may use shorter time periods. You may use an 8 or a 5, 8, and 13. Or you may not need a 20, 50, 100, 200 when you're looking at EMAs because it's front loaded and you're just looking for what's going to happen in a short period of time. If we're looking at a simple moving average, we're looking at what's going to happen in the next week, next month, next, so on and so forth. So it's just a difference in the formula of how it's formed. And then, it's a personal preference. I like the simple moving average. A lot of people will come to me and say, well, why do you use the simple moving average versus the EMA? If I'm trading shares, I think that without the element of time decay, simple moving averages still work the best in my opinion. Now, if I'm day trading or option trading, then using the EMA on a lower time frame could be justified as well. I'm not saying that it's not, and I'm not saying that I don't. From time to time, I may check an EMA. Like I'll sub my 20-day moving average out for a EMA, a 20-day EMA, or not a 20-day EMA, but a 20 EMA on a lower time frame, just to get a different reference. But normally, I like to keep it simple: 20, 50, 100, 200. And again, I like the fact that I can easily identify that when all of these are in chronological order, that 20 is going to be my strongest line. It makes it really simple for me. I like to keep my processes clean and simple, or I'll get confused. But yeah, does that answer the question?
Yes. And so if you were day trading or trying to scalp, that's when you would use the EMA or even just look at it?
Yeah, yep, yeah. The EMA on again, lower time frames. And if you're looking for a burst, like a more reactionary trade, then EMAs could work better. For scalping and day trading.
Okay, got it. Thanks.
No problem. All right, yeah. I think we've covered the MA ribbon enough, but again, since we just had this crossover, the 20 is now above the 50. Now we're in 20, 50, 100, 200. We're in that order. That means that 20 is going to be hard to break. And you can see we're already getting a bounce off of it, right? We had this red candle go below the 20, but then we had this green skyrocket back up to 527. And going into the week, we get to see if we're going to test this 530 again, or if we're going to sit back down on this 523, 524 line for consolidation. So, all right.
What does that last cross mean? The last time that the lines, those yellow and orange lines cross? So does that mean it's going up, or does that mean it's going down?
Yeah, this means that it's going up. So if your shorter moving average is above your longer moving average, that means that the stock has performed well in a shorter amount of time versus a longer amount of time. I know it sounds a little confusing, but
it didn't go up, it went down though. It didn't go up though, it went down though.
Yeah, but this is just the average, right? This is just the average.
Okay.
So this move right here from 500 up to 530 was strong enough to bend and carry this 20-day moving average back above the 50. So it's basically telling us that the average stock price over the last 20 days is higher than the average stock price over the last 50 days, which is true. It's carrying it back up.
Okay.
Even though we just got a slight downtrend. It's not telling you the day to day, but this is giving you the average again.
Okay. Thank you.
No problem. All right. VRVP. So the VRVP is the I said VRVP is I just drew a blank, but the VRVP is the volume range volume profile. Let me bring up my data window. Here we go. So yeah, I said volume range, visible range volume profile. Boy. All right. The easiest way to understand this indicator is by looking at these numbers here. You can see that we have up and we have down, and we also have a total. So the up is telling you the up volume, down volume, total is total volume. When you're looking at it, these nodes are color coded. So you can see, let me try to bring my chart a little closer to it. You can see what's higher and what's lower. So for certain nodes, you can see that we have way more up volume. For instance, we have up at 20 and down at 10. So that means that if the stock sits on this node, there's a lot of pressure for it to move up because the volume to the upside is way more than the volume to the downside. And that's also true to the downside. So when the stock got to this level here, if it would have broke and stayed below this support at about 524, we could have seen it drop down to about 517. And you can see that once we get down to about 517, the up volume is at 41 and the down is at 34. So we could have got a bounce here. But due to the fact that we didn't stay below this support, we actually hit it and bounced off. We start to test these nodes, and on these two nodes, this node right here, we have up at 12, down at 10. So 12 is more than 10. It's going to want to move up. And then once we got into this area on this node, you can see that we have up at 20 and down at 11. Of course, 20 is more than 11, so it's going to want to move up. But that's the easiest way to look at the VRVP. It is really a cheat code. It also adjusts depending on how many candles you have in your visible range. So if you take some candles out, give it a second, it'll adjust. And if you add some candles in, give it a second, and it'll adjust. So pretty good indicator to get used to using, especially if you're doing shorter trades. It also works on anything, honestly, but I've also even used this on the minute chart, 30-second chart for entries and exits on some of my day trades and option trades. So again, really, really good indicator, but it only comes with I think the premium membership. Hopefully they change that to where it's just, available for everyone. But I've been hearing that there are some different variants of the VRVP. Like there's I think it's orange or pink and green that's on this side of the chart that gives the same information, but I haven't tested that one out to see if it works the same. Questions?
So basically, up means buying volume, down is selling volume.
Yep.
And
the total is just a mix of the two.
The total is the mix of the two. So are you, for an entry, are you looking at greater buying volume or
Yep.
how do you, and to what extent? So what if it was up by 60%, down by, do you mean 40? Is that would you still buy in there? What's the ratio in terms
So again,
and how can you pick one of those candles where you're like, that's what that ratio looks like, and that's where I would use as an indicator to help me make a decision to purchase?
yeah, so it's really good for if you're going to enter and exit. And if I'm entering on the day, that means I'm watching the week or potentially the month. But when you're looking at entries and exits using the VRVP, again, like you said, you want to find up and down volume. So you also you can't just use any indicator alone. Well, you can, but I wouldn't. I will also pair it with other information. So if I'm looking at the VRVP, I also need to figure out where my moving averages are. I also need to look at the RSI and other things. But if we're looking at the VRVP in this situation, what I'm doing is if I hover over this node here, the up again is at 19, down is at 8. So, and also if I'm pairing it with my support is at 523.97. Again, confirmation for me is 2 candles to either side. So if confirmation to the downside is needed, I need 2 red candles to the downside for me to qualify that as a as a continuation for the downtrend. Now if it's moving to the upside, I need 2 green candles to the upside to qualify that. So the fact that in this area we only got 1 red candle and then it switched right over to green and it bounced at these levels, I can now pay attention to the VRVP and say, okay, cool, what is above? What is above and what is below? Right? So if we get to this node, I can see, okay, up is at 19, down is at 12. So there's a chance that, again, I still need to check my other indicators, but there's a chance that if we move into this area, which is above the 528 range, and we move on to this node, we could go up and test that 530 one more time, especially since we have the 20-day moving average leading the way, and we have 20, 50, 100, and 200 in that order, which again, when they're in that order, you get a bounce off of that line as a diagonal support. So again, it's just adding, it's a culmination of information that you add in together. But when looking at it, you want to see, okay, it's going up. What is up versus what is down, and where is my support and resistance? So again, looking at this, the notes are saying, hey, if we can just make it here, there's some volume waiting for us that can take us up to 530 again, just as a test. But then we look below, we can say, okay, cool. If we drop back down to about 523, 524, which is still right on top of that 20-day moving average, we have a big block of volume right here to where the down is at 44 and the up is at 26. So if we can get some confirmation and stay below the support, we could be brought back down to this, the top side of this 50-day moving average, which would be the next level of support. And then you can see on the VRVP, this is another big block of volume, which the up is now at 42 and the down is at 46. So if we don't get a bounce here and stay, this is almost for sure a decent bounce level. Also, we got this red line going through this node, which means that this is the POC, that's the point of control, which is pretty much the highest volume area for the candles that you have on the chart, which means that, again, this is where it's make or break. This is where a lot of things can happen. Again, if we were to reject, I don't know, we have some more war news, and we were to go back down to 524 and stay, we could go down here, but then I don't think we're going to break that POC. It's just a big block of information and data there that that this would be a pretty much a battleground between the bears and bulls to figure out which way we go. But right now, it looks like if we can stay on this node, we can move higher. And then if we check the node above the 530 range, you can see I'm hovering over it now. We're at about 7.5 versus a 6.6. If we can break it. Does that help put it into perspective, Ty?
Thank you.
No problem. All right. Great questions today. All right, MACD. The MACD is short for moving average convergence divergence. Really simple. This is a trend indicator. This indicator helps identify the trend. So if you're looking at the candles, if you're looking at all the other indicators that we went over, and you still can't put your finger on which way this is going or what's the overall trend, this is where you can check the MACD. The MACD has two lines. This blue line is the buying pressure line. The red line is the selling pressure line. And to figure out which line is in control, you just need to know on the right side which line is on top. So right now we have the selling pressure. It just took control. You can see it just started by checking that histogram. It just took over, but we do have the buying pressure starting to curve up a little bit, and then going into this week, we could see again, if it pushes back up to about 530, then we can see this curve up even more, and we can be set up for a potential MACD crossover. Now, a potential MACD crossover is always good because once the MACD crosses over, you get a spike in the direction of whatever is going to be dominant. So, for instance, we just had a MACD crossover to where the selling pressure started to dominate, and that's going to give you a decent size. It's not, it doesn't have to be an explosion, but it's going to be a nice size red candle because we just confirmed the downtrend on the MACD. So now if we get the MACD to cross over to the upside to take over the selling pressure, or I'm sorry, the buying pressure takes over the selling pressure, then we should get a nice green candle to go to the upside. So that will help our theory of the SPY coming down to support, bouncing off support, going back up to 530, and then we test 530. This MACD could be ready to cross over to the upside, which will also support us breaking through that resistance level and then moving higher. And if we move higher, we already see that the path is laid for us, according to the VRVP, for us to at least go back up into the 532, 533 range, as long as we can break through, and confirm those levels. So again, MACD is really simple. What's on top on the right-hand side? If red is on top, selling pressure is dominant, and that means the pressure to sell the stock is what's driving the stock. If blue is on top, that means buying pressure is dominant, and the pressure to buy the stock is what's dominating the stock. If you ever get confused on what's what, because it's not going to always be this clean, you may look at some MACDs and it looks like some scribble scrabble like this, to where you're like, I don't know what the hell's going on. I can't really get a feel for it. Just check the histogram behind the lines, and the histogram is just presenting the same information but just in a cleaner way. And if you have these bars in green, that means that the buying pressure is on top, and if you have the bars in the red, that means that the selling pressure is on top. So when you get into a situation like this, there's a lot of scribble scrabble, you can see that, okay, buying pressure is winning here, and it's been winning the whole time, and then selling pressure is winning here, and it started to win for a while. Buying pressure tried to take over, and then we just gave up to selling pressure here. So again, really simple, and it just helps identify the trend. Sometimes you may not use it or need it, but I always will watch for those MACD crossovers, because the MACD crossover to either side can tell you when it's time to get out of a trade or time to jump in a trade. Again, we just had this long streak of the buying pressure just completely dominating, but eventually, again, nothing goes up forever. It started to cool off, and before this MACD would cross over to the downside, of course, you would want to go ahead and get out of a trade that you've been winning on, because you don't know how long this selling pressure is going to dominate. It doesn't look like it's going to dominate for too long, but again, it comes down to risk management, and I wouldn't risk it. Just go ahead and take your profits and keep it moving. Any questions? Cool. Last indicator, which this is a secondary indicator. You don't have to use it, but I would use it. It's been helping me a lot lately. This is the stock or Stochh, depending on how you want to pronounce it, RSI. So it's short for stochastics RSI. This is going to pretty much tell you how much energy or move is in a trade, and it also works and corresponds with the normal RSI. So this, well, one thing I like to say is that this RSI is a bit more sensitive than your normal RSI. So if we compare this RSI to this one, you can see that the normal RSI was in a downtrend. Even though it's popping back up and we're at about 57, 58 now, it was in a downtrend from this point of hitting 70 and then went to the downside. But for that same period in time, we went from sitting at 100 to all the way down to about 10. Right, so we dropped about 90 points to the downside, again, because it's a little bit more sensitive, but it tells you how much energy there's going to be in the move. So once you get below this 20 range, it also has an identifiable range between 20 and 80 that you could use as bounce points. You can see that it respected this in the past, to where it hit 80, came down, broke a little bit below 20, went back up, hit 80, so on and so forth. But don't be confused. This really likes to hit 100 and 0. You can see in recent memory, it's been respecting those 20 and 80 lines. But if we scrunch it up a little bit, you can see how many times it hit 100 and then how many times it slammed into 0. The reason that this happens is because, again, it is a bit more sensitive. Someone had a question. Yep, Jessica.
Oh, I just wanted to say that I was looking at all the stocks that you talk about, and I add them to like a watch list.
Mhm.
And the SPY is of all the stocks that she recommended, the SPY is the only one that's gone down. All of the other stocks that you recommended, ELF, Transmedic, Amazon, the other ones, they've all gone up. And SPY is the only one that's gone down. So I just thought I'd let you know.
I appreciate that. Yeah, the SPY is a tricky one to play, because it's not a standalone stock, and it depends on what stock has the larger share of the SPY. So, for instance, Apple has been a lagging top stock for the SPY, because for a while the SPY was being led by Apple. Apple is the number one stock. If Apple went up, the SPY went up. It was that simple. Now that Microsoft has taken over Apple, and then we also have NVIDIA sitting right at one point, I think that we're going to get NVIDIA being bigger than Apple. It's literally right behind it in third place. Once NVIDIA goes over Apple, then Apple is going to have less impact. It's going to have less impact on the SPY. And I don't know if we're going to get NVIDIA but Microsoft to lead the way, but Apple can lick my butt. Yeah, Apple has been, I don't know what happened. I think that the fact that they've been trying to move their production of the iPhone from China to India, that's always going to cause some issues because they're moving into new territory. And then honestly, like I said a long time ago, I don't like the fact that they chose to go with the Apple Vision Pro at the price point that they brought it out at. I still think it's a great idea, but I think at $3,500 for just a basic headset was just a dumb move, and was a slap in the face for their customers. Like, you're already selling them $1,000, $1,500 iPhones, and now you're going to go ahead and try to force them to buy a $3,500 headset that they don't need. So
Oh my
Apple
God,
has been thinking. Oh, go ahead.
I'm sorry to interrupt you. That entire company is such a shit show, because they literally, their phones, like, first of all, they're totally overcharging for like all of their products, and you're just paying for a brand. And then the other thing is that there's like, you won't be able to add any more updates. Like your Apple phone or your MacBook Pro that you paid like thousands of dollars for, that you literally had to go on a payment plan to pay for, all of a sudden you can't install any more updates. And they're like, oh, we're sorry, we can't provide you any more updates on this product. You're just going to have to buy a new phone. And
Yep.
it's like, oh, I'm still making payments on this phone. Like,
Yep,
it's
they'll
ridiculous.
sunset.
And you can buy like $100 phone that does more than an iPhone can do. It's ridiculous.
Yep. So
But
that's
with
why the
but with
SPY has
Apple,
been.
hasn't
Mhm.
it? It's recovered. Like, it's done 15% over the past 3 months. It's staging a recovery.
Yeah, if we can look at Apple real quick, since we pretty much done with the, oh, I think it's AAPL. I'm tripping. Yep. Since we're pretty much done with the indicators, if we look at it, it's at 192. But if we scrunch it up, Apple has been trading sideways since July of 2023. So almost for a year, Apple hasn't moved in price when we've had Nvidia, I mean, just blast through the stratosphere. We've had, and then also you got to add in Tesla's decline as well. So Tesla is back at the same price that it was, what, like 2-3 years ago. Apple has been at the same price for a year, pretty much. And then you have Amazon and all the other ones break out. So again, when you're looking at the SPY, you got to remember that it's not a standalone stock, and that it's going to be driven dependent upon the majority, I would call them shareholders. The companies that can move it the most are going to have the most impact, which again was Apple for a while. It was Tesla, but I think Tesla has fell out of the top 10 or is struggling to get back in the top 10. But yeah, so when you're trading the SPY, you also got to just check these other charts, like check Apple and zoom out. I think a lot of people, when they're looking at charts, they're only looking at a few months. Zoom all the way out to get a better picture of what's happening, right? And so if we look at Apple now, it has recovered in the last few months, don't get me wrong, but if we stretch out back to July, it's pretty much been at the same price for a while. It hasn't really, and then if you compare this chart to like Microsoft or Meta, it tells a different story. So they really haven't grew at the rate of their competitors when it comes to, and what I mean by competitors, I'm talking about as far as share in the S&P 500. Jessica?
So apparently, like with iPhones or Apple phones, there are many times when you are not receiving text messages from your friends that own regular smartphones or Android. But with an Android phone, you're receiving text messages from Apple users and Android users. But
Yeah, Apple.
that's what Apple does to try to get people to join the Apple bandwagon,
Mhm.
which is total bullshit, because you need to just buy an Android phone so that you can get text message from everyone, not just your Apple users. And people in really poor countries that can barely even afford to buy a phone in the first place are buying these expensive phones because it's like a brand that makes them feel special when they own an Apple product.
Yeah,
And they're making their money on these phones. Sorry, I didn't mean to go on my I won't say anything else. Sorry.
no, it's okay. It's okay. It's open dialogue. This is good for just mentality when it comes to these companies. But yeah, Apple, they call it a walled garden. They're doing it on purpose. They want to keep you in the ecosystem. They want to keep selling you, their products at their price. But I think now that Apple stock hasn't moved in a year, pretty much, they're starting to see that for a while the consumer, Apple consumers, I'm an Apple consumer as well, but for a while, well, I've only had one iPhone my entire life. That was the iPhone 11 Pro. I still have that phone. I don't plan on buying another iPhone for a while until this one breaks, but um, I think that Apple, they're starting to see that the consumers aren't dumb. At first, they were just like, okay, these are dumb consumers that as long as they're being led by entertainment and by the brand, they'll buy whatever we put out. But now that the competitors are now starting to catch up, like Samsung is starting to sell, is starting to take market share from Apple when it comes to, global cell phone sales and revenue. Now Apple is going to say, all right, well, we have to innovate. For again, one example was Apple just holding back on AI. Do we think that Apple have the money and the know-how to add AI into their products? Of course, it's Apple. It's a 2.5 to $3 trillion company, but Apple likes to hold back on technology to try to squeeze the lemon pretty much and get as much money as they can, but it's now starting to backfire, and we can see it in their share price. Like consumers are starting to have better options, and then Apple came out with a $3,500 headset, which was another attempt to just sell you something that Meta is making for, I don't know, $500, and to charge more to see if they can take, they're just pretty much pushing their brand on you, which I think now they got to get back into the innovation seat, and if not, we're going to see the decline of Apple. So it's a make or break moment for them. Either innovate and continue to move up, or try the same tactics. But you also have to respect the consumers that we have way more information than we had, or we have way more access to information than we've had in the last 10, 15 years. And we also have more competitors that can stand up to Apple when it comes to variation in products. So that's how I feel about Apple. I still think Apple is a great company. Don't get me wrong, but I think they've been trying to milk the cow for too long, and now it's starting to come back and bite them in the ass. So we'll see what happens moving forward. Hopefully they reduce the price on the Apple Vision Pro. I think that will help them, but I have no say in what they do, so we'll see. All right, that's it for my indicator breakdown. Great discussion, and I'm going to go ahead and pass it over to Mark. He's going to do the pattern of the week, and then when it comes back to me, I see we already have some stocks in the chat. Yeah, we got ARM, NVIDIA, and Amazon. So I'll make that a priority to go ahead and break those down. Lisa, you had a question?
Yeah. Is it just possible for us to go back to stochastic RSI really quick? Like you mentioned, I've got a couple of notes here. So it basically tells you like how much energy or move is in the trade. It's more sensitive than normal RSI. Usually stays between 20 and 80, but it likes to hit 100 and 0. So basically don't be complacent. Can you just kind of explain more about like how it sort of translates as an indicator? Like what, if I'm looking at it right now, what is it telling me?
Yeah. So yeah, I like the way that Mark pointed this out in a few sessions. What was that? I think it was maybe like a few months ago. But you can also look at this as the RSI for the RSI, right? If we were looking at the normal RSI, because again, these kind of work in tandem. If we're looking at the normal RSI, we can see the normal RSI is at 67, but the stochastics is at 43, right? So if this RSI continues up and it hits 70, like it came off a high of what? I think that's 73. Yeah, 73. This is telling us that this RSI can over rev. So if you're ever wondering, okay, RSI is at 67, is it just going to hit 70 and reject? If you check the stochastics, you can see that if it hits 70, this stochastics is already at 43. The stochastics tongue twister, can get up to 100. So if this stochastics go for 100, that means we can get another over rev on the normal RSI that can push us back up to 71, 72, 73. So that's another way to check the stochastics, and that's another way to use it is, again, it can tell you how much, if you're looking at, let's say we were looking at a bull flag and we're waiting for a break. We're waiting for a break right here because this is pretty much resistance for this stock. This stock has tested this price level more than 3 times and rejected, and right now it's sitting right there at it and trying to break above. We check the stochastics. The stochastics is saying that, hey, if we break this, we're still at the bottom side. We have enough energy to go ahead and take this back up to 100, even though the normal RSI is at 67. So this is where you would, like I said, it's a secondary indicator because it goes based off the normal RSI, but it also gives you that additional tidbit of information to say, hey, if we over rev, how much can we over rev by, and when does it stop? So as soon as this goes from 43 and it slams into 100, party pretty much is over for that time frame. You may have to go to the weekly, or you may have to go back down to the 4-hour to get a different reference on what's going on. Does that help answer the question?
Yeah, okay. So basically it's telling you how much more room there is to move, even if the RSI is, say, like at, like the 70 or the 30 point.
Yep.
And basically if they're both really close to 70, then basically the movement is gonna it's not going any higher.
Right, yeah. If this one gets close to 70 and it's touching like that 80 line, it could break up a little bit and go up to 100, but that's not gonna push the normal RSI up too much. The normal RSI, if it's sitting at 70, it could go to 71, 72. If they're both at, for your example, if they're both at 70.
Okay.
I know it's a little different. It's an add-on indicator pretty much. So it doesn't have its own. It can't just stand alone. I would never try to use this by itself, but it helps when you're looking at the normal RSI, and also if you're testing resistance to see, like, okay, if we break through this, how much energy and how much gas do we have to get to my next price target to the upside? Is how I've been using it. And we'll talk about it in more sessions, and like when we have our Lisa, you're in the Discord, so when we have like our option session on Wednesdays, we can talk about it in relation to options, and I think that'll give you a better picture as well, because I use it a lot in option trading as well.
Okay, perfect. Thank you so much.
No problem. Yvonne?
Hey, well, can you also tell us what other indicators that you use for Confluence besides these ones? And also Mark, when he gets on the mic, if he can tell us the indicators he uses for, options as well.
Yeah, so I use pretty much the same indicators. Sometimes I may swap my MA ribbon out for a Bollinger Band. I think we talked about that one in a few sessions. So I may swap it out. Yeah, I'll turn off the MA ribbon and use the Bollinger Band. Hold on, let me turn off the VRVP. I may use this, which is a simplified version, pretty much in my opinion, of the MA ribbon. It's much more simpler to look at. But sometimes I may use this when I'm trading options, just to see if I'm touching that top band or if I'm touching a lower band, depending on if I'm trading calls or puts. But for the most part, I'm using the same indicators. I just may tweak them a little bit depending on, or I may look at them in a different way depending on the time frame that I'm looking at. They still work the same way. Like if you're looking at a 1 minute chart and you have the 20, 50, 100, and 200 MAs stacked on top of each other, and you have a test on that 20, it's still, I won't say it's 100%, confirmation, but it's still probable that you can get a bounce off of that 20, even though you're looking at it on a 1 minute chart.
Okay, no other ones?
No. I've tested a few things in the past, but these are the ones that I decided to go with. And from time to time, you may see me add different indicators, but I don't want to add too many indicators to where I get analysis paralysis, and then I can't make a decision.
Can we take a quick look at your Bollinger Band settings?
Sure. Bollinger Band settings are the normal. Once you add it to your chart, it's just the normal settings. The length is 20, which that would be the only thing that you would change. But the thing about the Bollinger Band is that it works best on the daily time frame. When it goes to other time frames, I haven't used it enough to see if I needed to tweak it in a different way, like if I need to change my upper, lower, or middle bands. But for the daily time frame, is pretty much spot on. you can use it for lower time frames. Like I'll use it as just like a overview. If I'm looking at lower time frames, I'm looking to see like, okay, if I'm on the minute chart and I'm using this Bollinger Band, I'm not really banking on this middle line, the middle band. I'm really much paying attention to the top band and lower band to see, okay, am I hitting that top band? Am I hitting that lower band? And if so, then I'll make my decision based on that. But standard settings, once you add it to your chart, it's going to come the same settings. You don't have to tweak anything. You can change the color if you want to, and you can change all this stuff if you want to. But I just use the default settings. Again, if you're using it on the day chart, spot on. But I'll use that as an overview indicator for lower time frames. Again, I don't really use it that often because I think the MA ribbon is way better in my opinion. But from time to time, I will turn it on, especially if I feel like I'm lost or I can't make a decision based on my MA ribbon for whatever reason. Does that help?
Thanks so much. Yeah, thank you.
All right, cool. All right, so I'll go ahead and pass it over to Mark so he can cover the pattern of the week.
Appreciate it, Ladarius. Give me 1 second to share my screen. All right. So this week, for the pattern of the week, we're going to go over the double bottom pattern. It's one of those patterns that you're going to see quite often. I remember last week we talked about different patterns and the success rate, and we mentioned that the double bottom pattern is one of those patterns that when you're seeing it forming, a lot of times you're going to see it complete. So I just thought it was a good idea just to go over it again and show you how you can trade it. So what are double bottoms used for? This is basically used to predict that the stock price is going to reverse in trend. So it's going to become bullish. It's going to start to go up in value. And it forms, you'll see the stock will, if you draw trend lines, it'll form a W shape. And you can trade off of this second peak of the W shape. Normally you'll trade once it breaks out of its neckline, which you'll see here. This is when you'll start to trade. Once it breaks above that and you can confirm that it is in the uptrend, that's when you will start to get into those trades. And target prices will be, you can make it the top of the W shape. I like to make it the top. You can maybe bring it down a little bit if you wanted to, but for the most part, the top of the pattern is where you're going to have your target prices at. And you can do swing trading with this, or you can do option trading. A lot of times when I see this happen, I'm going to trade an option with it because I'll make a decent sized profit relatively quickly. Any questions so far? Cool. And again, I like to tell people you want to wait until it breaks above the neckline before you start to get in trades, because this pattern can also look a little bit like a bearish flag, which we know is a bear trend. So it's going to be going down in value. So you don't want to trade this too quickly and it's actually a bearish flag, and then you're going to be losing profit. So you always want to confirm it when it's breaking above the neckline. All right, so here's a quick little example, and I'll show you another example on the SPY as well for a live example. But this is an example of a double bottom that formed on Apple a while ago. We can see that stock price started at a high at about 172, and it went down to 130. So we can't confirm that this stock price is in the downtrend. It created this pattern. It created the W shape. We see here the stock price tested support, went up to the neckline area, rejected from that neckline, and went back down to support. And then once it tested support, it rejected this area and it started to trend up. Now, if you wanted to be aggressive, again, you can start your trade here. I wouldn't advise that. I always advise that you wait until the stock price breaks above that neckline, just so that you can have a more profitable trade and you're not trading with a little uncertainty. So we can see that the stock price started to go up. It broke about above the neckline, and once it broke above the neckline, we see it began to continue to trend upwards in value. And it hit our target price, this black line, which is basically 172, which is where the double bottom began to form. So target prices normally is going to always be where the double bottom begins to form, and you can use that as your target price. Any questions so far? Cool. You also want to look at those other indicators like your RSI level, VRVPs, moving averages, stochastic RSI, MACDs. You want to use all of those to make sure that they're all lining up, that it is going to be a bullish indicator. The prices is going to go up in value before you actually get into that trade. Bear with me. And let's go to this live example. All right. All right, perfect. Okay, so here we have the SPY, and this was a few weeks ago. We can see that it's forming. We're not sure. You can't really tell exactly, and I'll get rid of these support lines as well. So we don't know exactly what's happening with the SPY, right? It's just a whole bunch of candlesticks. So the first thing that I always like to do when I'm charting out any pattern is to draw some trend lines. So we can draw, you can see the stock price was going down, tested this area, began to go up, came down, and now it looks like it's trying to, we have a green candlestick, so our next move we're predicting is that it's going to we're going to predict that it's going to go up in value. So that's what we're predicting that's going to happen from here, right? We think that it's going to be going up. Then I like to draw support lines, support and resistance. So we have support here at about 495. We have resistance right here at about 511. Then we have our all-time resistance we can draw here at about 524. So with all of this, we can see that it created us. And one thing I like about this one is that the moving average, this 50-day moving average, is going to be treated as a resistance. I always like when my resistance lines line up with my moving averages, because I know once it breaks above that, that's going to be for it to fall back down, it's going to take a strong candlestick for it to break below that once it breaks above. And then that resistance we have here is also our neckline. So this is showing me, okay, when the stock price breaks above this area, I can then potentially get into some call options and use my target price, make my target price 524. All I'm waiting for here is for a rejection, or excuse me, is for that break to happen. I'm not trading it right now because, again, this could also be a bearish flag, and the stock price could be going down in value. So you want to pay attention to that as well. So that's why we're waiting for that breakout to happen. And if we look at our other indicators, it's still a little at this point. If you're trying to get into the trade, there's still a lot of uncertainty. For example, RSI level is pointing upwards and is at that sweet spot. However, my stochastic RSI level looks like it's pointing downwards, and it looks like it's trying to cool down. And while we're getting close to a MACD crossover, it has rejected in the past, so it could reject again. So I would just be a little weary of that before I get into this trade. So that's why once it breaks above that neckline, that's when I'll look to see exactly what's happening on the chart and if I can get into a trade. So we'll let it play out a couple candlesticks. Okay, so we have that candlestick, and now we're above it. Okay, so now looking at this point, we had one candlestick that formed. It was really small. It created a T shape that we see here across neutral position. It was trying to break above that neckline. It didn't. I wouldn't have started this trade off of this one. I would have waited until this candlestick formed and it is above that blue line, our 50-day moving average, or my neckline, before I got into the trade. So I'm not trading off of this candlestick, this very small candlestick we have here. I'll start my trading off of this candlestick once it's confirmed that the price is above my neckline. And then again, I'll just be making for my strike prices on my call options, 524, 522. You can go inside that range for your strike prices, and you're just trading for that. Looking at all the indicators, it's showing me that they're all bullish. Moving average, a little bit above our sweet spot, but that's still fine for me. We're at a 56. Stochastic RSI level is pointing upwards. It has a little bit more room to get to that 100, which is good. The reason why I'm still confident in trading this is because we have this MACD crossover that's paired with this RSI level. A lot of times when we see the MACD crossover happen and we have a high RSI, the RSI level could tend to stay above in that range a little bit longer than normal. So anytime you have that crossover, a lot of times you'll see that RSI level, that stochastic RSI level, stay above that over bought region for a little bit longer. And I'll be in this trade, and then again, if we're looking, see, we got to our level. Took a few days for it to get to this level. It actually even broke above the level, but we got our level. We're in and out that trade, and we're looking to reanalyze what's happening. And then you can see here the stochastic RSI level rolled at 0, and that's why when that crossover happens on that MACD, I'm a little bit more certain that it'll stay above this area and continue to trend upwards. It looks to me, when that happens, it's showing me a good bullish momentum to the upswing, the upwards direction, excuse me. Any questions of how you can use it to trade, or any questions of anything I've said? All right. So if I don't have any questions, I'm going to go ahead and pass it back off to Ladarius. Oh, and I use the same indicators Ladarius was talking about for his option trading. I use the exact same, the VRVP, moving averages, RSI level, MACD, and stochastic volume. Those are all the indicators that I use as well. So everything that he goes over for his intro, I use those same exact things for swing trading, and I also use them to trade my options as well. So if I have no questions, I'm going to pass it back off to Ladarius so he can go over the stock picks. Thank you.
All right, I appreciate that, Mark. I see we had one more stock. What is it, MCD? Give me 1 second. Share my screen, and we can take a look at a few of these. See, MCD. Yep, McDonald's. All right, cool. All right, let's take it from the top. Where's the? There we go. Is it sharing? Nope. There we go. Cool. Alrighty. So let's take a look at NVIDIA. So NVIDIA is the talk of the town. I would say sometimes it's been single-handedly carrying the market. But let's look at this chart to see if there's any opportunities to the up or downside for the stock. Also, again, one of the reasons that I like TradingView is that give you these little letters at the bottom that means different things. You can see we have this S here for a split, and it's telling you it's a 10 to 1 split, meaning NVIDIA price will be chopped up in 10 pieces. We also have this little D, that's for dividends, which this is something that I'm paying attention to, is that we have a payment date of June the 28th, but then we have the X date of June the 11th, which is trying to click on this, which is a day after NVIDIA split. So that's why it's important to make sure you look at these charts. I don't think stockcharts.com has all of this, but this should come with any level of TradingView that you have. But it's good to pair these two together. Again, when the stock splits, there may be a lot of people taking profits, and then we could see it go back up. But then a day after it splits, we're going to see this dividend. Trying to click on it. We're going to see this dividend go into effect. And you want to be careful for the payment date, because normally on that payment date, the stock will go down based on the payment, which the amount is negligible. It is pretty much it looks like a cent per share. So, but if you're in a trade, especially for my people who trade options, and you need it to go up on that day or surrounding that day, you may want to be careful, because investors and traders may get out the way because they know that the dividend payment is going to be paid out. And normally when that dividend payment comes out, the stock experiences a pullback. All right, RSI is at 68, which is decent for this stock. The stock has been, and I'm saying decent because if we look up here, for a period of time, this was just hovering in the 80s. The lowest was like what 74, and just hovering again in the 80s for a while on its second run. Right now, we're coming down into the 68 range. If we look at where the stock is at now, we can see even on the VRVP, we have some up volume that we just broke through, and we're getting at the bottom. Well, we didn't break through it. We're actually at the bottom of this node. If we drop lower, then I think that we should find some support in this area. You can already see that we actually tested this area before on this wick. Let me zoom in. We actually tested the area before on the wick. It actually went down, but then it got bought up and it closed right here at about 1096, where it's at today. So if I'm looking at a floor for it, one floor would definitely be in this area. At about, you can call it 1050. It says 1056, but 1060 to 1050 is where I would see a pullback. Again, psychological levels are at play. We don't have too many data points to go off of to make solid resistance. Like we could put resistance up here, but it wouldn't qualify to me as resistance, but we could put it there as a choke point because it did get there and hover around for a little bit. Now, when we go back up and we test again, if it rejects again, then that'll be extra confirmation that this is actually a resistance point. So you can have a theoretical resistance point to the upside here, but I think that psychological levels right now would be probably the best. And then if we look at, let me see, what's here at about 1015, this is another spot that you could put it. So you see we have these gaps that we could fill on the way down. And then we also have this right here at about 976. But I think one of the major key levels is going to be right at 1,000, about here. And again, because I'm thinking about the psychological levels, a lot of investors and traders do not want this to go under 1,000 before the split. Because if it does, that means when it splits, the shares are going to be under $100, which I don't think people are ready for that just yet. But I'm saying this right now, if NVIDIA goes under $100 after the split, that's an easy buy in my book. I think that after the split, we could see NVIDIA 175, 200 after it recovers. I still think that there's going to be a pullback at some point because it's hot. But I think that moving into the future, that could be 6 months to a year down the line. We could see the stock price double from its original split point.
Here's the thing. That was my thesis earlier, and you knocked it down and said that they were slowing, which I agree with you, that they can't resume at their rate. Because yeah. I said it would go to 200. Like it's heading,
I think.
But you said that it can't sustain, because if it goes to 200, its market cap will be like 5 billion. Like that's insane. No, not 5 billion, 5 trillion. Like that's insane.
Yeah, I think that's why I said it could be a ways away, but that's something that's not uncommon in a bubble. I think that we're in an AI bubble right now. So you could, like for instance, we were in the EV bubble where Tesla was worth or still worth more than a lot of the automakers combined, right? And it was a bubble. It doesn't mean that that's the true actual value of the company. No, but the fact that we now have a split and there's more information now on NVIDIA and how they're going to process and how they're going to do things, I now think it's possible. At the time that I said that, I didn't have enough information to convince me that it could do it within, again, I still think it's going to take some time, but again, at that time, I was just going off the information that was available, and I don't want to put my foot in my mouth too soon. But could this get there? Yeah, I think this could get there. We just need to be cognizant that this is a bubble, and bubbles pop at some point. We're also seeing that Tesla was in a bubble, and Tesla, the air is slowly coming out of that bubble from Tesla. Again, it's at the same price that it was at, I want to say about 2 or 3 years ago. So just with these types of stocks, it's being able to, harvest your profits and get out before they let the air out of the balloon and it starts to normalize. So, my computer's dying. Give me 2 seconds. Put this on the charger. I have my charger right here. I wanted to disconnect.
So if you had a long-term position in NVIDIA, at what point would you start selling some, and at how much?
now. Again, I think that after the split, there could be a pullback um, before it goes higher. But when it comes to bubbles, we don't have any metrics that says, hey, the air is going to be let out this bubble on this day at this time. It will just happen, right? You don't want to be caught when that happens. You don't want to, you're up, I don't know, hundreds of, percentage points on a stock. The air lets out of the bubble and then you're stuck holding the bag. That happened to a lot of people with Tesla. They got in at, when Tesla was at its top, and then they've been waiting for Tesla to climb back up for 2 years, a year and a half, and it hasn't yet. So if I've been, it depends on how long I've been in. I'm not looking forward, I'm looking backwards when I'm answering this question. So if I've been in, since Nvidia was $160, then I mean it's an easy no-brainer to go ahead and start shaving some profits. But if I got in when Nvidia was $900, yeah, it's a different story.
If you
So
got,
I would
if
always,
you,
I'm always,
if
oh,
you
go ahead.
got in at 900, what would you do with your shares?
I would definitely be taking profits at some point.
Wh-
Again, with
But
this
at
split
what
happening,
percentage? Like half of them? 25% of them?
I would still be looking at like 15 to 25%, just slowly shaving profits. And then again, if the stock starts to prove itself, I will add more money back into it. Again, these reports and the information that's coming out about the company would drive how much money I take out or how much money I put in based on what I'm reading. So going off the information that I have today, um, I would slowly start taking some profit so I don't get caught. Um,
Even when the price target, the highest price target is 1350, going to 2000, right? That's sort of what it's looking at right now.
yeah, I'm saying 2000 is possible, but I'm not saying it's going to be. It may not even happen this year. 2000 may be possible next summer, or it may be possible. Again, it just depends on when this bubble stops. Like for instance, if we get rate cuts, this is going to keep going, right? Um, if we don't get
But
any
we
rate
but we
cuts,
will get we will get a rate cut if it doesn't happen this year or happen next year. One is coming down the pipeline. The
right?
the thing about Nvidia that's hard, and I just read an article about this, is that even for long-term investors, people who sell get slapped in the face. Every time you try to sell this thing, you get slapped in the face.
I don't.
That's
I
the
don't. I can't agree with that. I think anytime you take profit, you won. If you put in $1 and you turned it into 50, you made 50-cent profit, that's a win. I think greed is a thing. People are greedy to where you have FOMO, fear of missing out. So you may stay too long. But I think that we also have to remember the goal of what we're doing in the stock market is to make money and get out. It's not to get it's going to be people that say, hey, I want to get in when it was at 160 and I want to get out at its peak, but we don't know its peak. No one can confirm the peak. This could be the peak here. The peak could have been at 1156 and it could never go back there again. I'm not saying that that's going to happen, but there's a possibility that could happen. So you don't want to become greedy. I think that's how you keep your portfolio growing, and that's how you don't get stuck in a situation to where you're like, I shoulda, coulda, woulda. Is setting the greed aside. And I think right now the market is in a state of euphoria to where a lot of people are greedy, but that's when a lot of the people who are betting against the market can make the most money, is when everyone is thinking like, oh yeah, I think it's going to go up. My friends think it's going to go up. My parents think it's going to go up. It's going to go up. And then it turns around and goes down. People buy the dip and it keeps going down. So yeah, I would, again, taking profit is the name of the game. If we're not taking profit, what are we doing? In my opinion. Jessica?
What if it does like a double bottom? Because it looks like it's coming down
Mhm.
and then make it go back up and like bounce back up and then like go down again.
Yeah, it's
And
possible.
then like maybe it would start going back up again. So maybe we could like watch it and see if it goes like down a little bit and then back up and then down and then back up. And then maybe that would indicate that it's gonna go down, go up or go down or something like that. Right?
Yeah, I get what you're saying. This is when I would check other time frames. Like I wouldn't solely go off one time frame. Like for instance, we looked at the day. The day is not really giving us too much. Look at the day chart. yeah, it looks like it's coming down. We could be forming a bull flag if we bounce off of support and go back up to resistance. The RSI is cooling off. The MACD is already crossed over to the upside, but we do have some signs of weakening here. We also see that the stochastics is making, I wouldn't even call that a head and shoulders. That could be well, it's not a triple top either, but it looks like it's cooling off, but we don't know where this can stop at. So stochastics is cooling off. It's pulling down. It's just not enough information to go off of this chart. Like if I needed to make a trade on this chart, I wouldn't, because on the day chart is not enough information. I don't have enough things in agreement for me to make a decision. So I would need to go to the 4 hour. I look at the 4 hour and it tells a different story. Look at the MACD. Extremely close to a MACD crossover to the downside, right? Now, does that mean that it's going to happen? Doesn't have to. Look at what happened here. We had a bounce. The two lines pretty much headbutt each other, and the buying pressure stayed on top. We had the same thing happen here. So it happened twice that these lines just ran into each other and bounced off here and here. Does that mean that it's going to happen here? I don't know. If I knew, then I would tell you all, but I'm not sure. But the fact that we are cooling off, again, this is the 4 hour. We just came off of a touch at resistance, and we could be going back down to support just to cool off. We have a MACD crossover to the downside on the 4 hour. We also have the stochastics almost at the bottom, and I think this is probably going to go to zero. It's already at 10 more points just down to zero. It can sit here for a second, and then once it sits at zero, now it's time for it to try and to make its way back up to 100. And once it sits at zero, you want to be careful because it can stay at zero for a second. It doesn't just have to hit at a point and bounce right back off. It can go to zero and just float, and then go back up. Let's look at the 2 hour. Yeah, that 2 hours on the floor. Stochastics is on the floor. The normal RSI starting to curl back up. So we could see a sharper move back to the upside, but the thing that I will watch on this 2 hour is that we could hit this 1110 price and then reject back down. So this is what I'll be watching for NVIDIA, is to see, okay, what happens once it gets back into that 1100 range. Right now we're at what, 1096. What happens when we get into 1100, and do we stay? Also, don't forget, we do have reports coming out this week that could impact the entire market. So that's what I'm seeing for NVIDIA for right now. Again, I think that if we do see a move up, I will watch the 1100 price range to 1150, and once we can confirm, we get confirmation to one side or another. Again, I like 2 candles to either side. Then I think that the move could be made there. Let me see, what time are we at? All right. Oh, we're at 8. Let me keep moving. All right. So ARM. Ooh, what is this? Oh, it's the month. I was like, TradingView is doing it to me again. All right. So looking at ARM. ARM has been on a climb back from its low of its recent low at what, 85, but it needs to break this POC on the VRVP. You can see that it's been an easy ride up because there's not really that much volume going up into this point. But once you hit this point, this is a big block to break, and if it can break above this 127, we can just call that 130. The next level here is at about 132. And then after that, I think it can just pretty much push itself up to about 140. And then I think that a high point, a point to, if you're looking long, a point to watch is this 150 if it can get back up there. But, and for right now, I'll be watching this 127.50 range to 132 to see what it's going to do in between there. Again, because we have a big block of volume buys and sells that's sitting right here, and it's also forming a bull flag right below it. So let's check the other indicators. All right, yeah, MACD crossover.
Do you know
to the
what
up.
happened? Do you know what happened to take it from its highest point all the way to 85?
I think what happened is that they. Oh, you're telling me, or are you asking?
No, I'm asking.
Oh yeah, so I think that there was a lockup period to where, because this took off from 70. I actually traded an option when it was I played the earnings that to say but I made a lot of money when I traded the options for earnings. It went on this earnings. It went from 70 to can't even see it, almost 160 in the following days. But the reason that that happened is because of a manufactured short squeeze. 10% of the shares were the only shares that you could trade. 90% of the shares of ARM were stuck because again, ARM is a new stock on the market. So there's a window to where you can't, if you're already in the stock when it was a private company and it becomes public, you can't just automatically share your sales as soon as it hits the market. You have to wait. And so I think what happened is that you had people who were in the stock from when it was even before IPO. It may be some people that were in an ARM at $5, $10, right, per share. And it's a lot of major players that own ARM, percentages of ARM. And I think what happened is that they finally got out of that lockout period and they just started selling their shares and taking profit. Again, if you got in at $5 a share and is at 125, you're making $120 per share. Yeah, you're going to take profit. So I think that's what happened. But then I think once it dropped to this 85, 87 range, I think that the value investors who were watching for companies based on value, I think they started to buy in, and then it just went up with the with Nvidia and Taiwan Semiconductor as far as the AI trend, and it's been climbing back up. So I think that's what happened. Again, because I knew it was in a lockout period from when I played the earnings here, and I was wondering, like, it went up like 40, 50% in one day. The biggest earnings pop of the year at that point. And I still think it's, the biggest earning pop of this year so far. I haven't seen a stock go for 40, 50% in one day off earnings. I know when Nvidia had his big flash, it only jumped like 35%. And I know Meta, when they had his big move off of announcing that they were going to pay dividends, it moved about 35% as well. So ARM still, holds the trophy in that regard. But yeah, people bought it back up as soon as they saw, oh, it's at $86. This stock easily $300-$400 stock in the future. $86 is a no-brainer, and they started to buy it up. So I think that's what happened here. Does that answer your question, Ty?
Yes, thank you.
No problem. Cool. Let's look at it on the weekly, and then we can move to the next one. We don't have that much data. Still an infant chart-wise, but it looks like it's still riding that 20-day moving average to the upside. We haven't really gotten that MACD crossover that I thought we could have, but the stochastic looks good at 31. Again, this could go up to 100. It just may take a little bit of time because we're sitting on we're watching the weekly, but I think a major break point is still going to be what I talked about earlier, that 127 to 132 range. If we can break that and take that, we can move to the 140s, the 150s, and I think around the 150s we may find some consolidation before moving higher. So if this decides to go lower, I'm definitely buying the dip. Again, I think ARM could easily double in the future, and I think that when it comes to placing trades and finding great stocks long term, just aiming for a double is kind of what you want. And sometimes you can get more than a double. Don't get me wrong, you can 5x, 10x, but aiming for a double long term is a good way to balance risk, in my opinion. All right, Amazon. Amazon has been cooling off. It is still consolidating. Okay, so Amazon has been sitting between 165 and what's this top line? 190 pretty much, 165 and 190 since February. What is this? June pretty much. So that's about 4 months. Just been sitting and chopping around. I think Amazon is also like a sneaky AI play that a lot of people aren't paying attention to. But Amazon in the future, I still think that this could easily be a $250 stock. It's already tested like 190. And when I say future, I'm talking a year to 2 years. This could be 250. It could happen quicker, but Amazon is definitely a slow moving giant. But I think buying the dips on this stock, like now, it is below its, we're on the day. It is below its 20, its 50, and it's testing that 100. So this is what I'll be watching for, that test on that 100 to see if it breaks that 100. I don't think it's going to come all the way down here, but if it breaks that 100, I think that we could see it at about 170, which is only $6 away from where it's at now, before it moves higher. So this would be my waypoint, 170. And if we're looking to the upside, we still needed to break through that 178 to 180 price range. Honestly, I would like it to get above this level on the VRVP, so then it can go back up to about 184. And if it goes back up to 184, then it could get above its 20-day moving average. If it gets back above the 20-day moving average, we get our third test, or not third, but I think that's what, fourth test at about 190. So that's what I'm seeing for Amazon on the day. Check it on the week. Pretty much same picture. RSI is down, stochastics is low, but it's sitting right on top of that 20. And you can see it has been bouncing off of that 20, since the crossover. So you got 20, 50, 100, 200. It's sitting on top of that 20. Again, if it breaks below the 175 range, you could be checking back in at 170, which is a decent point. Again, if you want to go long on the stock. Let's see, 4 hour. Oh, yep, same story. So, yep, testing. This is the same story from the 1 day. We just need to watch it to see if it's going to test this bottom line at 170. If not, we needed to reclaim these levels to the upside. All right, let's move to McDonald's. McDonald's has been on the downtrend. I've been hearing a lot of bad news about them and increasing the prices of their products, but I understand how inflation works. So it's just funny to see what people are saying and how they're complaining about the prices of the products when it's like, hey, $1 is not $1. A dollar is not $1 today. Wasn't $1 3 years ago, especially since we had the pandemic and stimulus checks and all this other stuff happening. So looking at McDonald's, what I see is a bounce. They have a really strong support level here. You can see we had that support level in the past where it bounced off of about 250, went on a crazy run up to about 300. So a really nice run for McDonald's there. Did it test? Yeah, it even tested that level back in the past. You can see, yeah. So let me scrunch the chart up some. You can see this line that we placed that has been bouncing off of, has been a bounce point for it for a while. It's tested that line 100 times and bounced off. So it's making a double top. You can see that it hit here twice. It hit here maybe 3 or 4 times. Now it's come down to about 250. What we would like to see is a bounce and a test back up to POC. Again, it's the point of control, the highest volume area for what we're looking at. And if we can break that 264 range, I think that we could have enough gas to get above the 268, which would take us to the psychological level of 270 and then get us ready for a run. Now, if we reject at about 260, because we're at 258 right now, if we reject, we could be brought back down to test support, which if we test support one more time, I think we could be brought down into the 240s, and potentially we could be brought all the way down to this level here at about 230. The reason why I picked that level is because if you zoom out, look at how many tests we have here. 1, 2, 3, a lot of consolidation in the past from May of 2021. We also have a test here from October of 20. Let's see. Nope, and it hasn't been that high in a while. So yeah, these are the ranges that I will watch for McDonald's. I will watch 230, 250, and what is this? Yeah, 270, because that's the POC, this red line. So yeah, 230, 250, 270 is what I would watch. But yeah, if I don't have any more questions, I'll go ahead and close us out. Do I have any questions? I know we're way over time by 15 minutes. But yeah, it was a great session. Really got to get into the weeds and into the psychological part of trading, which I always like to jump into. But again, do I have any questions?
Well, Darius, when will this be posted in the Discord?
Yeah, so normally, since these videos take, it's like a 2-hour long video, it normally finished rendering around what is it, 8, maybe like 11 to 12 at night. I could post it then if you want me to, but normally I like to post it in the morning. But yeah, if it's done around 11 or 12, I can go ahead and just throw it in the Discord at as soon as it finishes.
Okay, thanks.
No problem. Any other questions before I close us out? Cool. Stop sharing my screen. Let me stop the recording.